right. Hello, everyone. Happy New Year. I hope everybody had a good break. If you did have a break over the Christmas period and the New Year period, but it's time to get serious about markets again. Is everybody ready to extreme volatility week? Yeah, that's the week we find ourselves in right now. Welcome to the Daily Show. Today, we'll be talking about, of course, stock markets, commodity markets, currencies, and cryptos leading into a pretty historic week in terms of implied volatility. There's just a little bit of news, guys, just a little bit of news over on Twitter. I did do a quick share before. I'll just quickly go over here. Just some of the news that's coming up here. Fed Chair Powell speaking Tuesday, 9 a.m. Eastern Standard Time. Then December CPI release, of course, 8:30 a.m. Eastern Standard Time in New York. That is going to be the big bit of news. Then we have consumer sentiment on Friday. And of course, the big banks reporting the Q4 season starts. Make sure you have your economic calendars ready. One of the ones I often share on the channel is the Earnings Whispers one. I'm not affiliated with them. I just think it's pretty sweet to have these versions. But don't worry, if you follow us over at FX Evolution, throughout the earnings period, I'll be highlighting each week in a couple of tweets some of the ones that I'm looking at that I think may be important to the markets. Obviously, we start with the big banks. How's everyone doing out there today? You doing well? Good to see. We've got Dave here staying up on the late night shift there, Dave. Also awesome to have our new members, Luke Lee and Mr. Michigan. Welcome. If you could as well, smash that like button to get us started for this year. Had 2 weeks off. Obviously, that's pretty unusual for us. And to get these streams going again on the YouTubes, it's always good to get a couple of likes coming on the algorithm. So thank you very much. Everyone's wishing each other a pretty good start to the year. A few people saying big bull run starting. Check it in the chat what you think. Or actually, even if you want to, before we go over to the Twitter poll that I posted a little bit before, what do you think's happening this week, guys? Bullish or bearish or neutral? Check it in the chat. Let me know. Let's read a couple of comments here. All is well, says Roger. Fantastic. Jan says, hi, Tom. Happy New Year. Could you possibly do your view on the China stock sometime when you get the chance? Yeah, we'll be talking about our 2023 kind of thought processes at the beginning of today's show, and then we'll go into the big one. And Quantum Mechanic getting wild, $50. My God, Quantum, thank you very much. Happy New Year. Glad to have you back. I'm glad to be back, Quantum. Actually, I have missed you guys. It's good to get started. Couple of new updates I'll be doing to the live stream over the next couple of weeks as well. So hopefully those upgrades come through and you find them good. Thank you very much, Quantum. Your support is greatly appreciated. So Monster Trading brings up probably one of the big concepts here, which is dead cat bounce in his opinion. Let's have a look at the US 500. Let's take a look at the actual markets this week. Now, interestingly enough, if we're talking about implied or the kind of expectations of the options market, there's a steep curve increase, of course, leading into the inflation. By the end of the week, at the time of previous close, the SPY was expected to potentially be as high as 396 and as low as 379. So 68% of the time, the market is expected to be within those boundaries. Now, you may say, well, why is that even important? Who cares about that? That doesn't interest me that it's going to be in these boundaries. Well, part of the reason why it's important to note is that listen to this in terms of implied volatility change. The next couple of days, we're kind of looking at that 392, 383. Then as of the day of the inflation numbers, just the S&P, not anything else, moves from being basically an expected move of around 1% to 2 to 3%. So it just shows you the power of the inflation number at the moment on the current markets. So let's discuss what we have coming into today. A few people have said this is a false rally. It looks kind of fake. I'm not going to deny that I wouldn't mind to see the market, of course, pick up into this area and then make a pretty big decision. And I would obviously like to favor this because we've been discussing it for a long time. That is a rally into a drop later. Will we get it perfect? Nothing's perfect in trading, but you can always put your best foot forward. But let's talk about today because we're opening here pretty bullish. We've got stocks like Tesla coming through very strong. We have the US 500, 39.11. So right at the top of this little bit of supply before the drop before. This has stopped it a few times. So let's look at the market structure leading in. First up, we know that this is an important area. I think everybody knows that 3900 to 3910 was something that stopped the market previously. You can see over here the buys, the sells, pretty important level. So we're leading in bullish. Let's now go down to something like a 5-minute chart. Have a quick look at this. So here's our 5-minute chart. And when we're looking at this, it's kind of making a series of higher peaks or higher highs and higher lows at this stage. If you're feeling bearish today, what do you probably need this market to do? I would guess you need it to close most likely underneath this level or at least make a new low. So you're looking at probably like that 38.89. So if the market opens and then it starts selling off and it gets underneath that level, when it rallies the next time, there could be a day trade towards the short side. I'm going to play both opportunities out here, but that's certainly one of the key kind of thought processes here. This is still critical resistance or supply, if you want to call it that. That's what it is. So even if it goes up quickly, then rejects instantly, especially if there's a big wick in there, takes that low upon, if it does rally again, there's a good chance that there'll be shorters. Let's play the bull scenario out. The bull scenario basically is we have a pullback. We don't go lower than maybe one of these lows. We find rallies all the way through the session. We close above a 39.20. I'm going to ask the chat this. Chat, what do you think the next level is most likely for the market past 39.20? So let's say we go past 39.20, coming into the end of the day, get a daily close. What's your thought process ahead of inflation? Tomato. Oh, sorry, Tomato. Sorry, man. He says here, Thomas says bears have been way too confident last few weeks. Yeah, I do agree here. 39.90, 39.60, 4K from Gary, 4K, 39.80, 4K, 4K, 39.90. Few people saying the 4K. And Lola Pino says moving sideways with volatility both ways. Yeah, so I think if we get through the 39.20, you've got to assume that it will go for that gap fill. Remember, we always want to mark whenever you're doing a chart, especially if you're a stock trader, if you're somebody that trades stocks individually, indices, any of those things, you're always wanting to know where are the gaps, what's happening, where was the market closed last time, and mark them in, because even today you should have the gap filled. So we should know where that's going to be. So we'll load up this, we'll load up the SPX, and we'll just do it together. Might as well have a little bit of learning in each one of these sessions that we do throughout 2000. It's something I want to bring in for 2023. I'd like to just always add a little bit of additional. So this is something I like to do every single time I come in on the mornings. If we know that the market's bullish or bearish, I want to know where that last close was. So 38.94. And I'm sure a lot of you already do this. Do most of you do this? Most of you put in your 38.94 here so you know where the gap close is. You can get instant, a bit old school. You can get indicators that do it for you if you wish. But I like to put them in there. So I need to know where the gap is. So we know that the bottom here, which just so happens, if you notice, which just so happens to be that little wick low, interesting, key level, yeah, certainly a key level for today, is the close gap. So if the market does sell off early, we don't know that the market's going bearish. If it just comes down, fills the gap, it will need to go underneath a little bit, then look towards the rally. Let's go back to that 5-minute chart and have a quick look here. See, this is why I'm looking for it underneath actually here. So I'd like to see the market. If the market does this and there's wicks here, purchases, we've got to assume it's filled the gap. It's looking towards the long. If it takes this low, although it looks relatively, small, and definitely it's more of a marginal style position. If the market then rallies past that, depending on how it rallies, things like wicks, if there's not wicks, it's more body closures, etc. There might be a little bit of a short coming through, which could push, down to at least 38.70, maybe even into that 38.40 kind of range. So it's very important to know where your gap fills are. So we know we're breaking out. We know that everything's looking really strong. It could be just a pure push. But if we just continuously push over the next session or two and we end up being at 39.95 or 4K, then suddenly we've got Powell coming out later on this week. We've then got inflation. What's more likely at that stage? Coming to fill the bottom gaps. So at the moment, our leading theory is that we will want to at some point get this week, and then ideally we'd sell off. So that's the leading theory. Somewhere around that filled gap, daily level, downward trend line, and there's a lot of confluence that we can build around that zone together. Josh says ES right now at 39.39. Yes, you'll have to use a different price on ES. Just remember, if you're a trader of these markets and you look at ES, which is of course SP 500 futures, once you go down to a 2 hour, the price is just going to be slightly off. So 39.33, I would suggest if you trade ES, try to do analysis also on something like SPX 500 US or US 500 futures, and make sure you have both done, because of course this is more to do with the current spot price of SPX. This one here is the futures price, which has a few other things taken into account. So just remember that. I don't really prefer to do ES charting as much as I like to do. There's a reason I use US 500 and others. I don't mind ES, but you've just got to be wary of it. Tort says, why not a breakout to the upside? Well, yeah, I mean, it could be in terms of you thinking that it's breakout, but you have to contend with this level. So let's talk about this level. First up, what have we got? Well, we've got the downward trend line. We know that this has not been breached by a bullish closure all of 2022. So it was our leading line. One, well, where it started. 2, 3, 4. We wicked, we rejected. We could be going for it right now. We know there's an unfilled gap there. We know there's a daily level there, which is a previous closure. And we know there is a downward trend line there. And we know there was a Fibonacci there, the pocket. So we know there's 4 reasons not to believe that this is basically where the bulls have full control. Now, a lot of other analysts and a lot of other people won't really be seeing it necessarily that way. Some will. Most won't. A lot of people got incredibly confident towards the short side last week. But look, I mean, realistically, we stuck to our guns. We thought it was either going to be bang, bang, or how it looks so far. I really would prefer to get it up here. It would be quite nice. Tort says junk broke out, was leading all year. Yeah, so that's an interesting comment. So basically that's talking about high yield bonds, that is junk bonds. But I want to talk about how I believe you may not be able to use bonds this year the way you used them last year. If you were to say which should be the better performer this year, you would probably go towards saying treasuries, high grade corps, potentially. I wouldn't buy junk anyway. I think it's trash, but literal trash is junk bonds. But yeah, high grade corps are the best they have been since I started in this industry. I've never seen high grade corps as good as they are now from a perspective of pricing and actually creating yield. Treasuries are a well-known grab. So if you were to say first up 2023, what is my personal thought process, and I think a lot of others, well, I've said this for a little while now, I think TLT and other treasuries are an interesting idea. Of course, practice your own risk management. That doesn't mean go trade it right now and go, oh yeah, look look at me, I'm going to go long. It's going to go long the whole year. No, that's not how trading works or investing. But it's I think it's a fairly logical conclusion. If we've killed inflation or at least slowing it, and also if the US economy is sick, because treasuries, although they've become well known to be a very staple kind of investment during recessionary periods, that's what they are. They usually cover that. So treasuries, I think, is going to be very, very interesting. Abu says, Mohammed says, bonds will get murdered this year. Well, it depends which bonds. Are you talking about treasuries? Are you talking about junks? Are you talking about something else? I mean, I don't like junks anyway. Ryan says, time to start averaging into a short position. Well, interestingly, we did the Twitter survey just a little bit earlier, and here's the result that we've got. 57.8% of you said the stock market this week will be bullish. 23.1% of you said bearish, and 19.1% of you said neutral. So that's 1,612 votes. It's a decent amount of votes. Now, probably a few of you are biased by videos that we make, but this is by the end of the week. So that's an interesting one. By the end of the week. Not by today, which I think a lot of people are voting for. Not by necessarily tomorrow even, but by the end of the week. Now, I'm not so sure that the bulls will be so happy potentially if the inflation number doesn't give the jack that you need, but this is where it's at. That's what we're looking for. We're basically here at the supply, and we need to know whether this market today can get a closure above like a 39.20 and then allow further rallying. And if it does rally through and leave this gap, which we now know is at 38.94, if that doesn't fill today during the show or during the open, then it brings further strength to filling this, and to potentially even filling the 35, I think it's like 35.82 one, which would be awesome. Now, do I think the 35.82 one can fill in January? I don't think so. And we'll bring up Exhibit A in a second to do with that, which is, of course, options. But just remember, for anyone that's viewing for the first time, for anyone that's joining us for the first time, the options puts are ridiculous for January. They're everywhere. It's like a plague of them. Sandola77 coming in with a $4 super sticker. Thank you so much, Sandola. Appreciate it very much. Thank you. Thank you. Good morning and happy Monday. Great to have you back, Sandola. Lance A says the market is a show, pretty much. Travis T says, do you believe the DXY is decoupled from the SP 500 this time? I think so, yes. I think that the US dollar is effectively on its own trajectory now for this year. And that's because the US will be the first to most likely rate cut throughout the world. They'll lead. That will put weakness on the US dollar, which is already being packed into price. So remember, it's usually a buy the rumor or sell the rumor. And then the truth is, by the time it all happens and you realize that, it's too late. So that this DXY rebalance has been already happening for a while. And then we move forward. So, there's we're about to get a new low potentially today. If you're feeling bullish DXY, if you're like sitting there going, oh, I like the idea, I'll get rid of these lines. They're not worth having on anymore. If you're feeling like, oh, I need to be bullish DXY, very tough to buy it here. Very, very tough. This was probably, we liked it here at that 61.8, went a little bit lower, obviously didn't take the low out, went bullish, hit first, went through, non-farm payrolls, wrecked it. Down we go. Now, where do you expect the dollar to get to over 2023? Well, one thing that a lot of people have been drawing and showing me is this. And they're saying, look at that. Look at that. Look at that trend line. I don't doubt that it's an interesting zone. It's already dropped fairly substantially. If we take the percentage up here We take it down. That's 10% drop in the DXY from the top. But as they have to cut rates, which the US will have to do eventually, the DXY will weaken in proportion to things like the euro and others, because the euro will probably hold for a little bit longer. We'll see. Randy Hunt says CNBC is now banging the drum for gold. Good sell signals. Probably getting close. Yeah. Gold is at an interesting level. We'll talk about it in a minute. So that's my thoughts on DXY at the moment. It's a critical zone at the moment. You can't like it too much. And I'll give you some stats here, everyone. Let me give you some stats. Let's find out what the retail trader is thinking about the old currencies right now. So for a while today, pretty much through the Asian trade into the London trade, 83% of the main book of retail have been short the euro. So what do you think, chat, the euro's been doing? If 83% of people are trying to short it, what do you think it's been doing? That's retail traders, not big boys. All big girls. Punjabi Prepper says no rate cuts coming soon in the US. Well, you're thinking, next month, next 2 months, things like that. We're talking 12 months away. Prices are priced in based on a very, very long horizon. So, yeah, I mean, you're saying no rate cuts coming soon. Yeah, of course. The market's telling us the rate cuts aren't coming soon. You can literally see them. If we want to look at the rate cuts, we know that by April, we're expecting to be at 4.8. By September, we're looking at still 4.8. By December, we may have one rate cut. That's what we know. That's not our opinion. It's the opinion of the bonds traders. Everybody's saying going up. Well, let's have a look at the euro US dollar. Let's load that sucker up here. And you can see that's exactly what it's been doing for the last part of the session. Going up, up, up. And now it's hitting that critical kind of resistance at this point. So non-farms started quite a lot of wacky looking things. And to say, instantly the market's going to drop today or anything like that, we don't know that yet. We know that the markets usually prep to key resistances or key supports ahead of epic news. And we have 3 bits of epic news this week. I don't think Jerome's speech is going to be that big. I may be mistaking this, but I think the speech is it even in the US? Isn't it somewhere else? Can someone tell me that in the chat? I must admit I didn't have a look. A few people have been sending me this, claiming that a few people are calling 3,000 on the SPX this year. Yeah, I'm not doubting that's possible. I'd like to see a 3,250. That'd be cool. Sweden. Yeah, there we go. So he's coming in on Sweden. That's more likely to be some kind of statement or something. I don't think it's going to be that big a deal. What do you think, chat? What's everyone in the community think? Do you think that Jerome's Sweden speech, he might be too full to talk about the US economy. He's been eating all those delicious cheeses and chocolates and things. So most people are saying probably not. A lot of people coming out with their calls for S&P 500 this year to 3,000. When is the speech? It's on the Twitter, Olin. I've posted on FX Evolution's Twitter. By the way, we do have a free giveaway to start off 2023. If you're interested, all you need to do is jump on over to our competition page, linked pin description comment thing. So you can just jump on over there and just fill it in. We'll draw that next week. So if you're interested, totally free, get access to all of these. And if you get this one, then I'll be chatting to you soon. So if you do win that one, congratulations to you. That'd be pretty sweet. Good to have so many people back. Absolutely. So people are bringing in their expectations for the next 12 months, what they think the US 500 can do. I don't really like to make crazy predictions because look, they're only a guess based on what we think is going to happen. And I'm kind of like Druckenmiller, Stanley Druckenmiller. He'll say something, a week later, he'll change his mind if the evidence suggests he should make that change. And I'm happy to do that. Like for right now, if I was thinking about the next couple of sessions, yeah, I mean, this is my preference. It has been my preference since here. I've preferential thought about 39.95. I'm not going to say I haven't. That's what I've thought about. 39.95 is a level I've been thinking about for like 2 weeks. So it's nothing really has changed in that opinion. Now, if we hit this level somewhere in here, if I see a switch, I'm going to probably be thinking, okay, well now I want to see like a 37.50. And then if it can expire the options that we'll look at in a second, so we'll just play this out in our minds. If we can then expire all the options worthless, then we can push down to this one here, which is like a 35.82 or something. You can go check it out. And if we get down to there, that's where the real question mark will be. If this does happen. Now, could I switch that? Well, if we end up making a new bullish buy through here, I'm going to have to start questioning a lot. What if we break a 41.50? Well, wait a second. What the hell is going on there? Is this all part of a giant accumulation? We have seen larger traders starting to purchase. Was that just all book building to try to, stat pad the end of the year to try to get things into the market that they have to do? Well, we don't know that yet. So 39.95 is a serious level. Serious. All right, let's move on to the options and then we'll get into some of the stocks. I would like as well some feedback from you because it's the start of the year. I'd really like to improve the show, make it even more special. Probably get on the screen. We'll do some webcam stuff in the future as well. But let me know in the comments chat, what would you like to see a little bit more of in this pre-show every Monday? I'm always interested to know what you guys think. Let's move over here to the SPY. So we'll refresh this. Let's get the numbers. We know some things here. We'll do the ninth here to start off with. So that's, it's the ninth. So the ninth, we've got the 385 puts. Current stock price was obviously 389. Max Payne's technically a little bit lower. I don't think there's enough money here really at stake to necessarily look at that too much. Weird 10th one. Let's have a look at the 13th. So again, the 13th, there's not as many options as you would think, though there's an interesting number of puts here. Look at those 12th puts. Interesting number of puts just sitting on that 390. But what I want to do is go over to the 20th. Because this January 20th, I just don't see how the market can be too low leading into this. Total open interest amount, 5 million units. That's a lot. Who's this random? The 450 calls. Nice. 450 calls. But the puts, all of the puts, I think they're going to be sad face. If I was a market maker, not that I am, but if I was, I really wouldn't mind stealing a bunch of this money. Okay. Start the year off fresh, get a bit of coin. That's what they probably want. Why wouldn't you? If you're the composite man, if you're the market maker, why wouldn't you want to make a little bit of coin? So theoretically, remember our thought process is can we get to 4,000? If we do, then we push back down. And as long as we pretty much close between 380 and 400, we're pretty happy with that. It's pretty good. So that'd be pretty nice. I'd certainly like to see something like that occur. Alan says natural gas, it has massive profits if traded correctly. It's a great geopolitical trade. Yeah, they also call it the widowmaker, Alan. So just remember, natural gas, dangerously large moves. Monster Trading, $2. Thank you very much. Any chance we can Zoom one day where I do DM you? Thank you for the donation. I generally don't Zoom with people. I do some one-on-ones with a few select people that have messaged me, but in general, yeah, I just don't have the time as much as I used to be honest. Not like that, Mark. Not like that. Just getting on the screen again, man. Jason says you can't steal money from 450 call buyers. They are donators. It's pretty true. That's pretty true. Ryan Murphy says they don't think the rate will go over 5%. That's correct. I know the bond market is rarely wrong. Oh, they're wrong, but they're obviously forward predicting at the moment. I don't. I know the bond market's really wrong, but I would think the Fed will get over 5%. Well, the Fed's expectation dot plot. So if you looked at the dot plot the other day, which I think I shared over on Twitter, again, follow on Twitter, guys. I'll be posting tons here this year. I'll be posting tons and tons of Twitter. Here's the dot plot. So this is where they changed the expectation. Now, the interesting thing about this is if you notice, and a lot of people weren't making a big deal out of this, but this is why the bond market adjusted for it, is the Fed went up to 5.1%, and then they basically didn't include any real cuts. They actually said that in 2023, they don't even expect to cut. That's what they said. Do we believe them? Not really, but that's what they said. 450s are all Tom Lee. All right, let's move over to Tesla here. A lot of people want to ask about this one. Then we'll go through gold. Then we'll go through a couple of stocks. So Tesla's trading about 116.83. Again, one of our main lead theories on Tesla is it's going to be, well, firstly, people that were trying to get this thing under 100, they were just freaking out. There's way too many puts floating around 100. The market fell, remember, 200 to almost to 110, basically 106 within what a 2-3 week space. So it's a capitulation type of fear trade. Now, they're not for everyone. They're very tough trades to pull off. But the market went down to these hundreds, these 105 levels. So then we go over to the 20th when we get some serious options, almost 3 million units. Again, everyone's got these 100 puts. But if you notice, the max pain is still quite high. So I expect this to come in and go a little bit lower. But it still points towards, these rallies coming through from Tesla. Not that I necessarily believe in the price or anything, but that's what it's pointing towards. So yeah, expected weekly options high 121, 104 on the low. So there's still a bit of upside before you hit that kind of expected weekly high, which also would be around that gap fill. So if I was sitting, here, that's that kind of resistance zone that I'd be looking at. Gap fill, options high for the week. So expected to remain kind of within that level at this stage. And then, of course, we also have the resistance of the previous supply over here already smashing it around. So I think there'll be a bit of profit taking around this 120 to 122.50 area. John Hamilton says, is the market deaf? Seems like the Fed's been saying the same thing for a few months. They act surprised when the Fed repeats. It's a storyline, John. And I think most people, especially a lot of people this channel, thank you also to the 1,320 people who are coming out. You guys, everyone here is starting to understand that this market creates news narratives. Those news narratives help explain moves that didn't even happen due to that news. But the news narrative is so amazing. Everyone's like, wow, that totally makes sense. It's almost uncanny how good. And how many of you believe this? I mean, I totally believe that the news narratives are total trash. But what do you think out there in the comments? Most of it is really moving because of options and money, and where it is most profitable to move the position to and build a larger position. The question is, if you're going to use technical analysis, can you spot the larger money entering the system to build a position in a certain direction? News, while some does matter, it's uncanny how much of it sets up new positional moves that were technical. So always ask yourself the question, especially if you're in trend, will the news help or go against me? Generally, if you're trading a correct technical trend, it probably will help you more of the time than it actually hurts you. Where most retail traders make the mistake, and I wanted to say this, I'm going to say it right now. I need to say this, and I'll say it in the video probably, is natural gas. It's a classic case of so many people saying this to me. Up here, I was talking about how I don't think natural gas will go up. Everyone's like, the winter's coming. I said, yeah, and the winter's coming. I said, all right, well, it's summer in Australia. No, I mean, but the winter's coming, sure, but the price has gone berserk in anticipation of that. It's a buy the rumor, sell the fact. And you might say, but it's the hottest summer on record, Tom. It doesn't matter. It was still going to drop down to these levels. So just remember, this is imprint this thing in your mind. Imprint it in your mind. If a market buys heavily into a theoretically great storyline, e.g., earnings is coming, everything's going to be fantastic, and then all of a sudden it does meet those expectations and the stock drops and you go, what just happened? It's because you were had. You were had. 100% of the time you were had. They built and packed the price in. And the same thing happens with stocks all the time to you. When you first entered into trading, I bet you 90% of you, I'll put my hand up here, 95% of you saw a good earnings report and the stock dropped and you said, this makes no sense. Is the market dumb? I bet you someone said that out here. DC Han, $5. Thank you very much. What if companies fake out earnings and we have a goofy bear market rally and puts get owned until Fed meeting? Yeah, well, DC Han, we'll have to play with that as we do. At this stage, we can only really talk about 4,000. I can't say that I know the rally would go past around that level, give or take 10, 20, 30 points each side, because we just can't look at it just yet. Bureau Crazy says Friday makes 0 sense. Why do you care about whether it makes sense or not? The market gave a sweet looking rally and it rallied and it's been sold and it's been building a position. And now we move ideally to 39.95. Again, that's speculation, but that's where I think it hopefully should move to. And then we go from there. Today, though, could there be a short? Well, again, just remember that 39.10, 39.15 zone. If it does short down, go back to the first section of the video, 10 minutes in, and you'll see it being played around. We're looking for more than just the gap fill. Probably looking for a low here and a rally through the mid session, and then you'd look for a fall. Ryan Kong says the amount of drop in natural gas is a shocker, even with the warm summer in the UK. Yeah, because it was going to smash everyone anyway. Natural gas is a freak. It's scary trade, and most people never go back in history and really understand how ridiculous natural gas is. I mean, when you look at that on a weekly, can you really like this? Look at this. What is this? You think that's insane? What the hell is this? Look at that. Look at this. It's nuts. I actually don't trade it. And the reason is because I am scared of these events. Truly. Remember, it's got the WM name. There's a reason. TD says sounds like an emotional statement. It is, man. It is. It was an emotional statement to talk about that for sure. Because I've seen so many people get bashed by it. Look, TD, you got to understand. There's so many people that that get smashed in so many of these trades, and they message me, and unfortunately, I see that other side as well, and it's just not cool. People message me and they're freaking out, and it's not cool. So I'm just telling you right now. Georgie Lazarov, ASC stock in. Is this a head and shoulders? Few people saying they're going long natural gas. Well, this is theoretically the area that it's finding, you would think, some demand. You get a little bullish hammer here, but 2 hour, the first signs of at least something better than anything else through here. You've gone a low, a high, a lower low, and a higher high. So I wish you the best, and I hope it gets to $4 for you at least. Georgie says ASC stock. Is this a head and shoulders? Let's have a look at it anyway. ASC. I probably need the time frame. I'm assuming you're going to say head and shoulders. So that means probably the daily. Hmm. Uh, Probably don't really think it's that necessarily. I mean, here's the left shoulder in your book. Here's the head. Certainly the line. You'd have to say that's the right shoulder, which would be higher. Traditionally, you don't really like if I wanted this to be much better, I'd like it to have done this, breach that, pull back up, so breach that area, then sell off if I'm going to have a higher right shoulder. It's a critical level, but I don't think I'd try to short it necessarily. It did go on a nice rally though. What is this? Marine shipping. Guess it makes some sense. Marine shipping's pretty hot right now. I don't know. I think you got better shorts. I'd be scared of that one. Jazavo says if you buy natural gas now, potentially you wait 3 years for it to go up. Could be a while. Could be a while. All right, let's go through. I mean, it'll be jumping up and down 10, 20%. So a few people messaged me about oil. What are my thoughts? It's actually rallying kind of nice. We're getting back to that 77 area. We're about 76.54. I'd like to see how it reacts in here. And ideally, I see something like this occur, kind of like that. And if this occurs in here, then that'll be cool. We probably won't see it till later on through the session. But yeah, I'm liking it back into 77, then potentially short in this area. So we'll find out whether it can do it. I don't really want it to stop here and then start to create this. Otherwise, I'm going to have to look for to break through that. So if it just starts doing this and then goes up and then breaches down, then yeah, again, shorting positions would be the way to go. At this stage, nothing much. No thought process. It's kind of back to a critical level. Now, a few people said, what do I think about Chinese stocks? Do I like them this year? Hard pressed not to like them. That's why the market's going pretty bullish on them. Do I buy them? Not really. I think the risks are there in these types of stocks. I look, this is my issue. The Federal Reserve always loves, or well, at least America loves the stock market, and the stock market is partially a protected species. In a lot of the countries that many people in this stream live, the protected thing is property, e.g., if you're Australian or you're British or even some Europeans, Canadians, especially, you guys know what I'm talking about. Is property. Like they protect the property. The government literally goes, no, 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 no. They almost put the sovereign wealth of the country behind that asset class. In America, it has traditionally been, of course, the stock market. The stock market has always been quite well protected by the Federal Reserve, the US dollar. All of these things are protected, plus innovation. In times of great peril, does China protect the stock market or do they protect the property market? What do you think? YM says Papa Buffett bought TSM. Finken79 says rule number 6 is don't hold the Chinese stocks for more than a day, pretty much. The property market, that'd be correct. Yeah, they protect the property market a lot more. That's why you're seeing the debt relinquishing at the moment. They've got like this policy, they're getting rid of that policy, and they're going to move forward with what looks like looser lending. And looser lending will just kick the problem on. So the way I'm looking at it is if this loose lending does come through, I'll say this about not so much this year, but sometime later this decade. If there's no great reset in property, which I don't expect there to be, and specifically if loose lending comes into Western nations and continues and starts really heavily in China, I truly, 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 truly believe that we're going for a massive crash probably late this decade. And it will be spearheaded by absolute toxic debt. And I still don't think it's this year. And I still don't think it's this one. That's my opinion, but I do believe there is significant toxic debt. Anyway, my whole point of that, why I'm bringing it back to this, is because at the moment, they're going to bring out the serious stim packs. I would be very surprised if we don't see stimulation on stimulation on stimulation coming out of the Chinese government to protect the economy over the next year. And that's why so many people have purchased this. The reopening play is only that's actually a policy shift. So once that policy shift happened, it basically said we're going to bring the stim packs out. Where are we right now? Kind of a critical resistance. It's very bad idea, yeah, but this is what happens. Simone says, K-Tom, can you look at emerging markets? Yeah, we'll do that next week. Maybe we'll do a little bit of a session on emerging markets. Would the chat like that? Emerging markets, definitely a storyline that a lot of people are going with in 2023. Would you guys like the emerging markets? So yeah, that's my thoughts. I'd kind of like maybe that, I guess, if I was looking at these stocks, like these potentials of around 40 back on this QQQ, which will be equivalent to lots and lots and lots of the general broad indices. Picking any particular stock's pretty difficult though in this country. You've got to just kind of buy blends and deal with those things. What's an emerging market? Well, some of them, Tony, they just keep emerging. So some emerging markets, they just emerge and then they emerge and they emerge. I remember when I first got into this thing back in 2007 and 8, like heavily, and there were all these emerging markets, and let's just say they never emerged. You can get stuck in them for a very long time. But we'll take a look. All right, gold. Let's move over to gold. Is it a critical zone? Yes. You can see here on the weekly daily, we're at that kind of critical 1880. It's actually a very lucky number coming up with the 1888 kind of number coming up. No, that might not matter to some of you. It does to others. So we've got 1880, 188, lots and lots of potential selling zones there. And I think it's look, it's at critical. Is there any reason to hate on gold at this stage? Not really. The trend is been up. I mean, it look, every time we looked for the weakness, which we did look for here, no doubt, we got sells that weren't able to break new lows. We saw a series of higher lows coming through. We saw this happen last week, which again, we were looking at towards that buy side, and then just rallied to a new high. So there's nothing to say just yet that you can hate on gold. You can't. Not yet. Is it getting close to exhaustion? Probably. And that's because the mainstream media is on it now. Mainstream media is all over the gold train. So while we were loving gold train down here, they're loving gold train right here. And that tells you that you're probably going into something like this. And that's where you want to be in the future. Jason Bale says submerging markets. Yeah, submerging. That's right. Diego Portela says this is 100% a dead cat bounce and will continue the downtrend after today. Ooh, after today, hey? So you're saying today's bullish, then it goes down. I'd like to be at like a critical level ahead of inflation numbers, but we'll see. Quantum Mechanics says some emerging markets are like hydrogen fusion, always on the horizon, but never comes. Yeah. I remember playing SimCity 2000. Anyone remember that game? And it had fusion reactor. It was like the most expensive one. And I remember I always thought it'd be cool to have. I always thought it was like stupid that we didn't have nuclear because that was quite good in that game. And I was like, nuclear is pretty good. And then fusion, I was like, we need fusion. That was back then. Still not possible. Should have been called SimCity 2050. So here's Amazon. A few people wondering what I thought about this. Oh, I mean, this was crazy how low. Look at this. So I actually had an alert off this platform, and I had an alert just for a new low, and the sneaky little thing didn't quite get there. Look at it, 81.48. I do like it when it goes down to these lows, though. Look, if you picked up in here and you were buying that capitulation, it doesn't look too bad. And this is one of the most hated sectors. I mean, look, Amazon is thrashed. XLY, XLP is something that we look at a lot. And I think it's due for a potential, it kind of is due for a potential rally here. 56% down. And you got to like that weekly from last week. The daily itself looks pretty okay as a prelim. It's got that spring-like component to it with the new low that came off here, which is usually a very good sign towards further bullishness. So I can't hate on it. Even though picking these lows is very difficult, this is a critical low with a wick rejection, with a new low that takes out the stop losses that were here, and then a new low again that takes out the stop losses that were here and then instigates new shorts. I would have preferred it took the 2020 lows. Maybe it did on some platforms. I don't know. But yeah, I don't mind it. I think it's at that kind of critical resistance, but I like that candle a lot. It's kind of true, Crash. Glitch says, I disagree. In my opinion, the puts are too heavy. I think we get a narrative that everything is just fine and puts get closed worthless. Well, that's what we're asking for. Then when everyone thinks it might be safe, the bottom falls out. Yeah, but there's a lot of puts in the Jan. So have a look forward into the Feb. We don't get as many puts. Can we do meta? Yeah, we can do meta. You asked a lot, so we can do meta. Oh yeah, 131. So again, it shows you that sometimes buying horror stocks that are at the peak of the horror, usually the sign says something like this. If you want to know when a stock's bottoming, it's when this happens. I've actually got a meme. I can bring it up. This. Notice the dates. Let us read this together because it's probably a pretty good thing. And I'm not picking fun at this. It was just a funny thing that was in my room. I don't even know what the hell it's all about, but it was a meme that was posted, or at least it was posted like a meme. And I think it represents, unfortunately, the truth of what people go through. And it says here, it's true what they say, Tesla does have unlimited demand. Although Tesla investors have felt a bit of pain lately, I think eventually Elon Musk will reward those who hung in there. Do I sell my Bitcoin and get Tesla? Sounds good. I'm sounding really negative right now. I'm sorry I may be off. Unfortunate, yeah? Then it says, I'm not saying the price target will happen, but I think Tesla could go $20. So that's where people say it's not, you go from it's not possible to go any lower. I've got to buy it. I'm buying the dip. I'm buying the dip. I'm scared completely. I now believe there's a new narrative. Has anyone ever heard that? Can anyone tell me a currency or commodity that's happened on in the last couple of years? And I will say this. I'm reminded by gold. I know you might say Bitcoin straight away, but I'm actually reminded by gold. When gold moved to $2,000 plus an ounce, I never said this because I knew it was BS, and I hate these particular calls. Although I'll make crazy, outlandish clickbait if necessary for YouTube. You have to do it sometimes, guys. You have to do it. But I wouldn't say this. Gold to 10,000 an ounce. If you've been watching it, that's exactly what happened. And the same thing here happened with Meta. Is Meta dead? That's where it happened. Is Meta dead? So let's come back here, have a quick look. What do we got? 1 month. Very not easy to really see anything in particular here. 131. It's done a gap fill, I guess, that was there from the sell-off. So that gap's done. 131 pushes to 137. Look, I think it's probably getting into a critical resistance. And I could see it doing this, turning somewhere in here. Unlikely it just keeps rallying and rallying and rallying. It probably will drop. It's in the resistance. That's what I feel. This structure here held it for a while. The shock bit of news dumped it through the end of the world. The market's rallied. It's filled those gaps. It's filled that blank space. So now it could sit here for a while, drop maybe like a 110 or a 115, and then rally up. If you're asking my longer term, I just think it's kind of at resistance. Look, that's what I think. Within a few dollars. Meta hasn't cut enough staff yet. Yeah, cutting staff definitely is benefiting it, but there's maybe more to come. A few people say DXY is recovering fairly heavily. I'm not sure if I'm seeing it recover fairly heavily, but if you're wanting to set an alert, probably setting an alert for around here at 103.55. Looking for that kind of market rally through to here, then drop, then rally. Curtis says, Tom, China equals no dividends. Yeah, well, if you want dividends, Australian stock at the dividend wins. Jason Bale says gold best case is like 3K by the end of the decade, and I think silver could top 50 again. Yeah, I agree, Jason. I think 3K is very possible for gold, and it could happen if we get into heavy stagflation. But gold will have its ups and downs through that. Let's look at some of the big stocks here as we enter in. 11 minutes to go. We'll cover the Nasdaq and the SP500 and some other lead indicators and indices coming in here. We'll do a bit of a flash run for you guys. Expected moves, obviously, for Apple this week by options. It's expected 68% of the time to be between 134 and 125. Look, Apple's definitely been weaker. I think it's suffering from quite a few things the market's starting to pick up on. Technically, it was a decent, like everything else, they were all decent rejections last week, which give you think that there should be rallies. So again, drops you would think could be met by rallies. Do remember CPI, Fed, and banks all happening this week, stacked in on those Thursday and Friday dates. Make sure you get the times. I posted them over on Twitter. So Apple kind of facing that. Today, what do I think about it? Probably just in line with the rest of the market. Let's have a look at the Amazon. We've done that one. I like that one a little bit more. I think consumer discretionary has been absolutely flogged. Have a look at XLY and you'll see what I mean. But there's been a discernible shift. This is XLY. So it's made a new low while the rest of the market didn't even get close to it. Yeah. So new lows. So again, that's just why I think that some of these stocks, maybe they're finding a little bit more buys. Microsoft actually looks pretty sick. Could certainly buy out. Microsoft is probably one of my favorite stocks, but it's also very high PE. So I'm not so sure about this one. If you look at that on a weekly, it looks pretty gross. So even if it does recover, might be my favorite stock in the market, but I'm not going to think. Oh, it's so, you know, you could make arguments that it's super critical. 200 SMA weekly, so many things very critical here for Microsoft. I'm not too sure about that one. Move over to Nvidia. Nvidia had a pretty good weekly close. Let's have a look at the daily. Again, looks relatively strong. That's why it's having a good session here. 2 hour, again, looks really strong. Looks similar to consumer discretionary, really. That big bullish kind of wick that came off the non-farms. And then we find ourselves here, kind of in that resistance area. If we get the 39.20 break, you'd have to think Nvidia could have a serious run on it over the next couple of sessions and then suddenly move towards that 162-ish. Jezebel says Microsoft owns a large part of OpenAI. I love Microsoft very much. My favorite. Can we see communications and finance? Yeah, communications because of Meta found a lot of buyers recently. Nice looking base, actually. If we do breach 52, which you can see I've got an alert for, this could be a serious turn for communications. And you can really see how Meta does this, though. Meta really modifies this one. What about Microsoft long term? I still think it's really good. It's got great AI plays and it's got a really diverse business. I posted on Twitter about that as well. All right. Keep going through here. Just do a quick TLT. TLT had a pretty good session. Anywhere in this area and here, this 102, 103, you'd think TLT finds fairly strong buyers. That was a island reversal. Obviously, it's kind of playing out. Looking for it maybe to return back a little bit here. 6 minutes till we get open. Let's look at some indices. We'll start off with the DAX. DAX first up. Pretty strong looking breakout here early. Lots of buyers for the DAX. I think it's because there's so many short positions open, getting squeezed. Ahead of the inflation numbers, you'd probably expect the DAX to be somewhere between, you'd hope it's around 14.9, 15K. And then if it's around there, then that's going to be that kind of critical resistance that comes through. What do I think about semis? I think semis, well, it's kind of like my NVIDIA thoughts before, really. Let's move over to the US 30. US 30 looking really nice. That's a pretty solidified looking breakout. On the Friday session, it did end up closing above all of this. Again, the US 30, plenty of defensive stocks and oil stocks and things like that. They're benefiting today. So you'd have to say that still looks on target to kind of get back up into this area. Again, I'm using S&P 500, 39.95, 4,000 as mostly my rule. If we move over to US 100, another interesting style of potential breakout here today. Today's daily close probably shows the Tuesday session as well. If we end up getting a nice daily bullish candle, might go into another rally, and again hit some key levels ahead of maybe the Fed or the CPI statement. Nice looking base at this stage. Could this all be part of a false breakout narrative? It could. You'll probably find that out today, though. And it doesn't really make sense to the inflation unless the false breakout narrative is to push all the way to the low before CPI. And then if that happens, you're actually still thinking it's going bullish on the CPI number because it won't want to go bearish due to the number of puts that are expiring in literally 1 week. I just cannot see how by the 20th of Jan, any one of these market makers wants the market to be bearish. Check out TSM. So TSM, I heard the old Buff Master bought some of that. You can see why he may have purchased it in these 59s. He would have just disclosed him purchasing through here. It won't be him then. It'll be his new guys. But basically, he's getting that 2020 price. He's feeling like everything in the world's going to have a semiconductor on it. So there you go. Bought at 68. Yeah. Thank you very much to the 1,500 people joining us as well. If you can give us a smash of the like button, that'd be great. I've got a couple of upgrades coming through in the shows moving forward. So if you're a new time viewer, make sure to subscribe as well because we have a great daily show, great community. And of course, we have the live streams every single Monday. So markets open here pretty bullish. 3 minutes till the open. I did promise crypto. So let's have a quick look at crypto. Bitcoin is the one I'm going to look at here. Nice break from the 17,000 line, which was something we talked about, 17,001. Again, at this point, you're thinking it's coming into this red box. 17.5, I think, was 17.5, 17.6 was our main read here for Bitcoin. Does it really change my long-term opinion that Bitcoin should be at about 11.5, 9.5? Not really. I still think that's probably where we end up going with it, but it's going to need the stock market to do that, and that's going to need a new low on the stock markets to push crypto down that low. So I don't know if this is the bottom for Bitcoin, but we should know probably the low of Bitcoin somewhere about the time that we get the terminal rate completed in the markets. I'll explain that in a subsequent video in the future. The pivot and the terminal rate and velocity of money and all these things are pretty important for Bitcoin. Ethereum 1322. Again, just to put it in perspective here, it's been a lot weaker. Expect Bitcoin to lead now. We're basically in crypto winter, so Ethereum will not be the first to start up. I know Solana's going crazy, but usually it's Bitcoin that leads. BTC is not currency. Bitcoin's still a growth, like a risk on asset though. So 1 minute off the market open, guys. We're about to enter in. Nothing much going on yields. Of course, DXY a little bit weak, could strengthen through the session. We'll find out. And oil was pretty strong before, almost hit that 77 that we're looking for. Markets across the board up heavily. US 2000 also breaking out, looking towards potentially getting into that 200 on the daily up here, which is that 1820. Will it all happen through today's session? It's already starting pretty strong, as we said. Amazon had that nice bullish wick. Nvidia had that as well. And that's why they're going to open fairly strong today's session. So here we go. Tout says ETH versus BTC is breaking out. I'll have a quick look. I do like using combos, so you might be right. Yeah, that's fair, I guess. It's not breaking out yet, but it's making a series of higher lows. So that's pretty nice. So here we go. We've got the market open. We have opened a 0.61 up for the S&P 500. We're up about 0.92% on the Nasdaq. And then some of the big notable stock moves here are the big ones. Amazon up 2.2. That's a nice trade, by the way. If you got Amazon or Nvidia on the Friday session and held it over the weekend, congrats. I really like those trades because they had that really nice spring nature on the right side. Just to reiterate what that looks like, it's this here, that spring nature after banking a base. So if you're in that kind of person that had that, nice. Will we see a fill of the gap? I think today's very telling. So there's a huge gap on a lot of these stocks. If we end up getting rally, let's say, some extreme rally action, it really paints the picture that we should be coming back down after a CPI or something like that. Skyline 220 says Tesla rocking up 5.17% on positive China news for increasing delivery times. Decreasing delivery times or increasing? I assume it's speeding up the shipping of those cars. 5.83. Again, that's the narrative Skyline. I don't really care about the narrative too much, but what we do care about is the price is gapping up. And it's probably time that this market, something like Tesla does find some buyers. Remember, only a week ago we saw the inventory. What was it? Something to do with them shipping less than the expectation. That was the negative news that made other people think, oh, maybe the growth isn't there anymore in the stock. The stock had already been beaten 50% down. So now it rallies into perceived bad news. Inverted commas. Bad news. No worries, Dave. Thank you very much. You have a good night. Tout says US dollar tether versus US dollar DC total. I might check that out. If you send it to me in Discord, I'll check that one out. So here we've got the market open. We're certainly getting some nice rallies in the start of the session. It's bullish across the board. Luckily, it's in line with what we've been thinking here. Can it hold it up? Again, if it does go bullish, it keeps holding bullish, and then we get another bullish day followed by this, then it really plays into the narrative of the market going shorter later on this week. Let's just have a look at the SPY for a second. And I just want to have a look at some of the old previous closures. So specifically, I want to focus on these ones. So this one here was an interesting one because it kind of reminds me of here. And I always like to go back in history and think about a previous time where we've seen something into a similar style event and whether we actually had these obnoxious runs. So I remember this. We got this really big rally on rally on rally on rally and then just dumped after the inflation number. So again, if we get that rally on rally on rally on rally, and then we're here ahead of the CPI, it does play into that idea of the dump. If you're looking for the gap close, make sure you've got it on your charts. Key critical level today will be to watch that 38.94. Maybe set an alert for it just in case the market comes down for it sometime this morning. Don't be, FOMOing all over the place. It's never worth it. There's always another opportunity. Zero says, do you still think there's a negative correlation with the DXY overall market, or you see it becoming disconnected? I see it becoming disconnected this year. Shane says high yield bonds are saying a different story. Let's have a look at high yields. They're only up. They're up 0.23, so nothing much there. Kevin says, Tom, can you stop being so real? Let's pretend something good happens in the next month. Well, it is good, man. Volatility. Kevin, come on. Like everybody else here, you like volatility. There's opportunity. 2023 is going to be a great traders year. I'm feeling a good trade. I think it's going to be a great traders year. And 2024 is hopefully, or back into 23, I really think could be an investor's beauty time. So this year's could be amazing. And Phil, I'll finish up with you here. You said, can we have a look at CAT? Cal? Yes, we can. We can check out Caterpillar, which is a very, very strong stock. and it's based purely on, well, I think this was a China play as well. An American China play is the old cat. Infrastructure projects, government spends, that kind of thing. It's pretty unbelievable they've gone back to that chestnut again, where it's effectively all we're going to do is build our way out and create more debt. Look, it's a new high, and it's hard to hate on these stocks. I mean, industrials or any of these stocks have been very, very strong. I think it's a government stim. I think it's gov stim packs. Look, it's such an aggressive trend. I always find it incredibly difficult to buy that. But if you're in it, you can't hate on the price. You can't say, "Oh, I think it's the end of the trend." What indication do you have of that? Maybe set a under 224, 225. If it does breach underneath that, then all of a sudden you're going, okay, well, maybe there's worse to come on rallies. So I think that's probably going to be a sign that maybe the market's slowing here, breach of this, then it should pull up, and then you'd be expecting it to weaken. But at this stage, you can't hate. Few people saying fake break, low vol. It could be. I think it's a gov stim pack though. All right, everyone. Well, we've opened up. We've opened up bullish. I'd like to see this hold. Obviously, we're looking for a 39 kind of 15, 20 closure plus for the US 500. If it doesn't close the gap, that could be fairly telling about maybe the next session or two. Do remember the news this week. Please be careful out there. I've shared it over on Twitter. So we've got here Fed Chair Powell speaking Tuesday, 9 a.m. I think this is actually not that important. So we'll get rid of that. But look, that's just my opinion. We'll see. I don't think it's that big. This is the big kahuna, which is the CPI number, 8:30 a.m. Thursday. And then the next big number is, of course, the banks. And their reports will be relatively important. So if I was ranking it, I'd say number one importance, number two importance. I'm not sure. Maybe number three importance, then Powell, four. We'll find out. Usually I'd put Powell higher, but I just don't think you'll be talking about anything in particular. That would be correct, Marson, for your one. All right. Thank you so much. Thank you for joining us. What are my thoughts on the UK 100? We'll finish up there. The FTSE, pretty strong market due to oil. Let's have a look at it weekly. Yeah, I mean, it's breaking out, but do I trust that? Oil and banks and old economy stocks. You can't say you want to go short, but certainly it's a critical resistance. You have to believe the rest of the market is bullish if you like that price. Yeah, I just think it's a critical resistance. It's been there for so long. And if the market does end up having a full rally and this is somehow the bottom or whatever, then this will continue to rally up. But yeah, it's that critical. Thank you so much. Thank you for starting 2023 with FX Evolution. Appreciate you guys. We'll see you next Monday, same time. So we'll be around at 1 hour before the market open. I hope to have a few extras. We'll definitely be positioning the show to go through key news things. So I'll always be covering certain topics at certain times. So you won't have to necessarily go through my rambles as much. But I want to keep it in structure and just so that you get the top topics as fast as possible. Thank you for joining us. We'll see you next week. Bye for now. That's true, Zero. Goodbye.